Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. Can't really complain about the markets. It scaled new highs but has not managed to really sustain at the highest levels. In fact, Nifty 50 has just slipped into the red. So in the last half an hour of trade, it has seen some bit of weakness really coming in. It's a mid-cap index which is underperforming, and it's the Bank Nifty which is the biggest drag, and Kotak Mahindra Bank is one of the biggest draggers on Nifty 50 as well. But can't really single out Kotak Mahindra Bank today because most of the big banks who really have contribution to the Nifty Bank are in the red. But Larsen & Toubro, because of the much awaited buyback announcement, that stock is really taking it forward as far as the contribution to take the markets higher is concerned. But lots of sectors are a laggard, like metals, autos, Tata Motors is not doing well as well, Sonia.
Yes, but you know, the two spaces to be in this afternoon, I mean, the two spaces if you want to make money are pharma and the FMCG space. So many of these stocks hitting new highs. I mean, look at Dabur, for example, 6% higher on that stock right now. A new high for Dabur post the management's optimistic guidance. Bata, Godrej Consumers, a whole host of others, you know, that's about consumption. And in pharma, look at Sun Pharma, Suven Life Sciences, Cipla, Divi's Labs, all at new highs. So if you're a trader, these two are the pockets you'd want to really be in this afternoon.
In fact,
but across the globe,
while we are talking about pharma, I would like to make a mention of JB Chemicals, and that particular company has just announced a buyback, and that stock has really run up. So keep that on your radar as well. That is really adding to the momentum that the pharma companies are seeing today, and that stock is up over 7%, Sonia.
Oh, absolutely. I mean, it seems like the day belongs to these stocks. But let's also talk about the European markets. They opened mixed today after Beijing implemented new retaliatory tariffs against the United States. Even the Asian markets closed mixed. The other big event to watch out for is the Fed Reserve Chairman Jerome Powell, who will deliver a key policy address tomorrow at the Central Bankers Annual Symposium in Jackson Hole. But as we said, pharma stocks have seen a huge rebound. Stocks like Sun Pharma, Dr. Reddy's, Cipla, most of them sitting at fresh 52-week highs. Ekta is here with how the stocks have performed. Ekta, over to you.
Hi, thanks for that. Well, I'll take you through a couple of statistics in terms of where these pharmaceutical stocks stand as compared to their 52-week highs and as compared to their 52-week lows. Now, what really stands out is the rally which we've seen in Sun Pharmaceuticals, Cipla, as well as Dr. Reddy's. So Sun Pharma, Cipla, both of them have respectively gained 48% and 29% respectively from their 52-week lows and are at fresh 52-week highs. Dr. Reddy's is up 31% from its 52-week low and only 5% away from its 52-week high as we speak. Now, in terms of the others such as Biocon, Glenmark, Ipca, these are basically the non-index pharma companies which are closest to their 52-week high. So Biocon has seen a stupendous rally of 93% from its 52-week low, just 11% away from its 52-week high. Glenmark up 33%, Ipca up another 93% from its 52-week lows, and just around 2 to 5% respectively away from their 52-week highs. But you can't say that for all of the pharmaceutical companies. While they all have gained, the likes of Aurobindo, Lupin, Cadila have some distance to climb when compared to their 52-week highs. So Lupin is up 25% from the 52-week low, but still 17% away from 52-week highs. Aurobindo up 28% and still 17% away from its 52-week highs. Similar case with Cadila, which has rallied significantly, almost 20% from its 52-week highs, but still 25% away from its 52-week highs. Now, lastly, just want to point out Strides Shasun, because that stock saw complete, it was pummeled after its Q4 numbers, but the stock has risen 46% from the lows that we saw in the year, but it's still 54% away from its 52-week high.
5 to 6 months down the line, if there is no other generic approvals for these two products, then we would stand to gain a very significant opportunity in that 180-day period. We have just upped our filing guidance to now over 22 files, 22 to 25 filings per year from 15 to 18. We are seeing significant further improvements in the review process and the time for product approvals. We have been seeing very limited or marginal, or in some cases no price price erosion rather on most of the products.
All right, Pharma makes a comeback, but one stock on our radar is Larsen & Toubro, which gets a boost after the board approves a 9,000 crore rupees buyback. So the stock is up 2.5% as we speak, and this was a much-awaited buyback announcement that the market was waiting for, Anisha.
Oh, well, yes, when the buyback news actually came out, the stock was already up around 3%, and today we are seeing another up move. And the reason is that the buyback size of 9,000 crores is much ahead of what the street was expecting. For example, Macquarie was working out with a number of $0.7 to $1 billion, and this is much ahead of the upper target of the range as well. Motilal Oswal was also just working with a number of 5,000 to 6,000 odd crores. Even if you look at the buyback price of 1,500, that's around 170 rupees higher than the current market price. In fact, even higher than the lifetime high of around 1,450 that the stock had seen. Yes, the acceptance ratio works out at a number of around 4.3%, but do remember with L&T, we do not have any promoter holding or promoter buyback participating in the buyback, so the acceptance ratio of 4.3% should work out. Other than that, if you look at the comments coming in from the brokerages, Credit Suisse this morning itself had said that if there is a buyback of around 5%, that can improve the ROEs of the company by around 150 basis points. And this is something L&T has been working for, improving the ROEs. They have a target to bring into a higher level by the end of 2021 as well. The cash volumes and the cash balance is steady. The net worth as well works out to a good number. So overall, the brokerages were not very concerned when it comes to the cash volumes of the company. So this seems as a positive because it will go a long way in improving the ROEs for the company.
Okay, yes, and the street has liked it. I mean, look at the rally that L&T has seen ever since this announcement was made. Thanks, Anisha, for that. Let's take a short break on that note, but up on the other side, we'll get you an excerpt of our exclusive conversation with Gautam Singhania, the chairman and MD. Guys, welcome back. You're still watching Business Lunch on CNBC-TV18. Now, it's flat for the markets, but it's a bit under pressure for the mid-cap space, you'd have to say. The Bank Nifty is the one that's getting hit the hardest today. Perhaps some profit taking there. But on to a CNBC-TV18 exclusive and a face that you rarely see. My colleague Nigel D'Souza caught up with Gautam Singhania, the chairman and managing director of Raymond, to discuss a whole host of issues. Of course, his bullishness on his share price as well. He says if he gets the right price, he will look to sell non-core assets so as to reduce debt in the books. Listen in.
If I'm a buyer at 1,000, I'm certainly a buyer at 750. We are clear that we wanted to launch this 20-acre project. Yeah. This is really to unlock value. Right. And we are in the right direction. We look at it every day, every week. That's the top priority. I'm not able to tell you exactly what we're doing because nothing is done. You know, like they say, it's not done till it's done.
Let's talk about the other non-core assets, the auto space, the hardware business. Now, those businesses, they have been doing
very well.
They're doing well.
Extremely well.
But at some point of time, would you be looking at a buyer for both those?
Show me the money. If somebody had shown me the money, it would have been gone by now. You might sell it. You might be looking at other options. Right. The fact is, philosophically, it's on our radar. Yeah. How to skin that asset or monetize it or whatever we have to do.
What about the debt in the books? On a quarterly basis, you're spending around 50 crores or thereabouts as interest cost. Yes. So the debt in the book should be roughly around 2,000 crores, very, very approximately. You'll have a target in mind, right? To bring down that debt?
See, we're at the end of the capex cycle. Yeah. Your capex in Amravati and Ethiopia, that took the debt up. True. Moving forward, we're not got any capex planned. Your cash flows will become positive and your debt will come down, from that. Number two, getting rid of NPAs, non-performing assets. Yes. Whatever we can get rid of. Supposing you get rid of the auto component, it will bring it down. If you're able to monetize some of the land, that will bring it down. True. Efficiencies, better working capital management, etc., all will bring debt down. So it's in the right direction. I don't think we're alarmed about our debt. We might be 2,000 crores and not 2 lakh crores or like, but we want to be debt-free over a period of time.
How long would that be? You want to be debt-free?
Very difficult to say. I mean, today if I monetize the land, tomorrow I'll be debt-free tomorrow.
If I put it in cricketing parlance, you've got the best players in the dressing room. Now they need to come out there and all play the innings of their lives. So no one's ever, questioned the players in the dressing room. But how do they come out there and play that one innings that takes Raymond to the next level?
The game has started. You're going to have to wait and watch.
All right, wait and watch from Gautam Singhania. Let's focus on the FMCG sector, and stocks are surging in trade today. Nestle and Dabur hit record highs on bullish management commentary coming in. And remember, Pratap Snacks gains over 14% after acquiring 80% in another smaller entity, Awad Snacks, which is Indore-based company. Let's take it straight to Mangalam Malu, who has more details on FMCG euphoria. Mangalam.
That's right. So Dabur and Nestle, both of them held their analyst meets over the last 48 hours, and the management commentary was fairly bullish. For Nestle, I'll talk about the two key points. The first one was, of course, that 25 of their 39 recent launches have done well. That's a better hit ratio than the national average of about just 0.5% successes in the new launches. And secondly, the company has divided its business into 15 clusters, which gives it autonomy. Why is this a positive? A few years ago, another company in the name of Hindustan Unilever did that, winning in many India's strategy, and that took the company to a new orbit. So this is a positive strategy. Edelweiss maintains hold on account of elevated valuations. However, Credit Suisse, they believe that after 7 years of zero volume growth, it's just been 2 years of positive volume growth, and they continue to see this turnaround story. Their target price is upwards of 12,000 on Nestle itself. For Dabur, the management has guided for double-digit volume growth for the remainder of FY19, and this after the first quarter showed a volume growth of 21% itself. And here too, one strategy which was really impressive is the fact that the company will pick 3 brands every year, invest disproportionately in them for them to grow going forward. On the back of which CLSA has raised their FY20 and FY21 estimates by 3 to 4%. They've increased their target price on the company from 500 rupees to 575. Finally, in the snacking space, Pratap Snacks has acquired 80% of Gujarat-based Awad Snacks for about 148 crores. This is a cheap valuation given that they've got it at around 1.1 times sales, and the growth that this company has shown from 27.5 crores in FY16 to just about 140 crores in FY18. The management said this is a profit-making company. Close to around 7.5% is their EBITDA margins. So going forward, they expect to get a better share of Gujarat's market, which is India's largest salty snack market. In fact, we spoke to the management, and this is what they had to say this morning.
Company's revenue currently is around close to 140 crores, with EBITDA margin of 7.5 to 8.5%. Okay. They are number 4 player in the Gujarat category. If you see Gujarat market, Gujarat is hardly 4 to 5% of the India population, and they consume around 12 to 14% of the Indian snacks. So it's a huge opportunity in Gujarat. They are very strong regional players in the Gujarat market. So we were finding it difficult to go on our own Gujarat market. So we feel that with our acquisition, Yellow Diamond product can also go well in the Gujarat market.
Okay, getting snacky there. Look at the stock up almost 13%. Clearly the big mover in trade this afternoon. But moving on, the Punjab National Bank chairman spoke out on monetization of non-core assets today. He told us that the NPAs will reduce by almost 5,000 crores this year. Take a look.
We had out of the first list of 12 accounts, we had exposure in 9 accounts aggregating roughly 12,000 crore. After which in 2 accounts we have already received the money in Q1, and 2-3 accounts we are expecting to get the money in the Q2. It will not be fair if I discuss individual accounts, but I can say fairly these 2 accounts will aggregately give me a reduction in reduction in my NPL to the level of 5,000 crore. We have already made 63% of the provisioning requirement. We are much ahead of the curve in this matter, and the remaining provisioning we will be able to complete in the Q3 quarter, and we are already geared up for it. We are expecting a reduction in credit cost because the first quarter, if you see my first slippages, the fresh slippages were lower than the slippages of Q1 17. So that way, our monitoring systems, which we have created a special assets monitoring vertical, so that vertical which we have created in the month of June has started yielding good results. And we hope a substantial reduction in slippages during the current quarter itself and throughout the year as well. Non-core assets, we are trying to monetize roughly 8,600 crore of our non-core assets, so including of some of the fixed assets. And we are already geared up and fully confident to achieve it. PNB, MetLife, we are not going to go, we are not planning for a disinvestment. We are simply going for a price discovery. So we are even diluting less than our other proportionate partners. even we are divesting less than even MetLife and others. We are just going for 4%.
Welcome back. Take a look at the markets. Flattish at this point, but it's a mid-cap index which doesn't seem to perk up at all. In fact, has gone down deeper. Bank Nifty is the biggest drag on the market. Some of the heavyweights which have really shown some bit of weakness in the last few minutes of trade are Tata Steel, Eicher Motors, Kotak Mahindra. All of them have lost ground. In terms of mid-cap space, take a look at All Cargo Logistics, that is at the lowest point of the day, and Kaveri Seeds, which was gaining, has given up some of the gains from the top. Let's take it straight to some more opinions coming in on the markets. And earlier we spoke to Vineet Sambre, who's the head of equities at DSP Investment Managers, who says that the current market rally is triggered by the Q1 numbers. And he also says that they will definitely consider to reopen small and mid-cap funds for the investors as the valuations have really corrected.
I think it is to do with the excitement which got created because of the good performance coming out of the first quarter numbers. Please remember, first quarter numbers are also aided by the low base last year, and hence the continuity of these numbers is very critical going forward. My sense is that in terms of valuation, although we have corrected some bit, we've not come down to extremely attractive level. Given the macro headwinds, given the election next year, I don't rule out a possibility of volatility being high and some more corrections likely, which probably is also an opportunity for the long-term investors like us to keep building fundamentally strong companies. The US generic pricing pressure which all these pharma companies saw. Now, talking of the US FDA plant-related issue, I think some of the companies are towards the verge of clearing them. Some of them have already cleared the US FDA plant-related issues. The approvals have started coming in. The other bit, which is the pricing pressure in the generics market, I think that continues unabated. We have seen instances where the global generic majors have shared their opinion that they do not want to conduct business at these levels. So in a way, we believe that the pricing are also at the bottom level of the pyramid, and hence there is scope for improvement going forward. The valuations were running way higher than the fundamentals, and even for us, the opportunity size was shrinking. Now, with the correction taking place, we see that some stocks have come off to decent levels. And some of these are our high conviction bets. So it makes sense that if the money were to be deployed at a level which is going to make sense to the investors, at those reasonable levels of valuations, why not? So we are definitely considering that, and at right time we'll make the announcements.
Okay, well, moving on, speaking from the sidelines of the AMFI Mutual Fund Summit 2018, the SEBI chairman Ajay Tyagi said a more healthy competition is needed in the industry. Speaking on the recent cases of AMCs violating rules, he said the regulator is looking at norms for fund houses investing in its group subsidiary. Take a look.
We expect industry to be matured enough to see that these things do not happen. And in these cases, we reacted almost immediately, you would see. And whatever is required to be done, we will see that this doesn't happen again. And if it happens, we will take action very promptly, I can promise you that. The concept of TER, when it started in late 90s, when the AUM was 50,000 crore, it is 23 lakh crore now. So some of the elements need rationalization. We are examining that, and we will actually come out with some prescriptions on that.
All right, let's take it to an important development and important national news. Arun Jaitley has resumed office today as the Finance and Corporate Affairs Minister. And remember, he had been on a 3-month break as he had undergone a kidney transplant on 14th of May and had been recovering since then. Piyush Goyal had assumed charge as the Finance Minister in Jaitley's absence.
Okay, well, there is something more to cheer about. Ace shuttler PV Sindhu has ranked number 7 in the Forbes list of highest paid women sportspersons. This list pegs her earnings between June 2017 and June 2018 at $8.5 million, which includes prize money and endorsements. A big round of congratulations to India's sporting icon. And this is important because for the first time, a non-tennis player has been included into this list.
All right, women making a lot of money. There's a lot of hope for both of us, Sonia, on that front.
Sports persons making a lot of money.
Yes, I hope it comes to our sector as well. With that, we are completely out of time on Business Lunch. But let's once take a look at what the markets are doing at the moment. And it is fairly flattish. Nifty 50 is holding at 11,579 points, and Sensex is up 0.15% as we speak. So that's the scenario in the market. Midcap index has dipped for the 0.37% down at the moment. Larsen & Toubro remains at the highest point. So lots of action when it comes to the overall markets as well. And then on to action also coming in from other spaces.
Yes, of course, the Asian Games. How can we forget that, right? Action from Indonesia, where it's day 5 of the Asian Games. Indian tennis player Ankita Raina won the bronze medal in the women's singles semi-final. She lost to China Shuai Zhang, while another medal assured for India as Rohan Bopanna and Divij Sharan have beaten Japan to enter the men's doubles finals. So far, India's medal tally is quite strong actually. 4 gold, 3 silver and 9 bronze. So congratulations to each and everyone at the Asian Games 2018. With that, it is curtains down on Business Lunch. Lots more coming up on the other side of the break. Do stay tuned in.